Have you seen what's happening with silver? While the Western markets are sleeping, something explosive is brewing in Shanghai. Right now, physical silver in Shanghai is trading near a staggering $80 per ounce. Meanwhile, here in the West, the COMEX paper price is lagging way behind, stuck around $72. That's an $8 gap between the physical metal in the East and the paper promises in the West. This isn't just a small difference, it's a massive arbitrage opportunity, and it's pointing towards a structural path to a $12 gap or even more. The timing of this couldn't be more critical. We've just entered what traders call Ghost Week. This is the period from December 26th to January 1st, and it's famous for being the most illiquid, thinnest trading period of the entire year. Why does this matter? Because during Ghost Week, the entire market dynamic changes. The senior traders, the big decision makers, and the risk managers are all on vacation. They're not at their desks. The major market makers, the ones who usually provide stability and liquidity, pull their bids and offers. They don't want to get caught in any unexpected volatility. So, who's left running the show? Skeleton crews and trading algorithms. These algorithms are programmed to react, not to reason. In this kind of environment, even a relatively small order can trigger a massive, violent price swing. There's no one to absorb the pressure. It's like throwing a pebble into a still pond versus throwing it into a raging river. During Ghost Week, the market is a still pond, and every little disturbance creates huge ripples. This brings us back to the core issue. Shanghai versus COMEX. It's crucial to understand that Shanghai trades in actual physical silver. When you buy silver there, you're arranging for the delivery of real metal. COMEX, on the other hand, is primarily a paper market. It's about trading contracts, promises of future delivery. In a normal, balanced market, these two prices stay closely aligned. But we are not in a normal market. We are in a shortage market. And in a shortage market, the price of the physical asset always leads the paper price. The real stuff becomes king. Think about it. Once Shanghai establishes and accepts $80 as the going rate for physical silver, that becomes the new global reference price. It's no longer a point of resistance on a chart, it's the reality on the ground. People are willing to pay $80 for the metal right now. So, why isn't this arbitrage gap closing? In a textbook world, traders would buy the cheaper $72 paper silver in COMEX and sell it for $80 in Shanghai, pocketing the difference and bringing the prices back together. But that textbook scenario is broken. The arbitrage mechanism is failing for a few key reasons. First, you can't deliver the physical silver fast enough to meet the demand in Shanghai. The logistics just aren't there. Second, and this is a big one, the registered inventories at COMEX, the actual metal available for delivery, are at critically low levels. There just isn't enough silver in the vaults to satisfy the demand that this arbitrage opportunity creates. The demand from arbitrageurs alone far exceeds the available metal. Instead of the price gap closing like it's supposed to, it's stretching like a stretched elastic band. It keeps stretching, building up tension, and eventually it's going to snap. And when it does, the thin liquidity of Ghost Week means the price move could be incredibly unpredictable and explosive. We already have the three conditions in place for this gap to widen to $12 or more. Condition 1, Shanghai is holding strong above $80. This isn't a fleeting spike, it's being driven by relentless industrial and investment demand in China. They need the metal and are willing to pay for it. Condition 2, COMEX is failing to catch up, partly because of the holiday lull during Ghost Week. Condition 3, there are no major physical sellers stepping in to relieve the pressure. Where would they come from? The vaults are already tight. There are multiple ways this could play out to create a $12 gap. COMEX could actually drop while Shanghai holds strong at $80, or COMEX could rise slowly, but Shanghai reprices even higher, say to $82 or $83. Another scenario is a sudden spike in Shanghai while COMEX stays completely flat. Any of these will widen the gap and increase the tension. A $12 gap would be a seismic event. It would signal a complete failure of the paper price discovery mechanism. It would tell the world that the price on the COMEX screen is no longer a true reflection of silver's value. The potential consequences are serious. We're talking about a complete loss of credibility for COMEX. This could force a violent repricing higher in the paper markets just to try and catch up with reality. It also dramatically increases the risk of stress on the vaults and major concerns about delivery failures. This is why using high leverage right now is extremely dangerous. During Ghost Week, you can get these sudden, violent killer wicks on the charts that can liquidate a leveraged position in the blink of an eye. You could be right about the direction of the market, but get wiped out by a split second of volatility. Those who hold physical silver, however, are insulated from this. You can't be liquidated from an asset you hold in your hand. So, what should we be watching over the next few days? There are 5 critical signals. First, is Shanghai holding above that $80 level? That's the anchor. Second, are physical premiums rising? If you see the price for coins and bars increasing even if the paper price dips, that's a huge red flag for shortages. Third, watch for longer delivery times or dealers moving to pre-orders. That's a direct sign of supply strain. Fourth, keep an eye on the COMEX vault reports. Are we seeing continued withdrawals of physical metal? And fifth, on the charts, are we seeing more frequent gaps between price candles instead of smooth, continuous trading? That's a sign of thinning liquidity. Ghost Week isn't a time for markets to calm down. It's a period that amplifies chaos. The physical market is now clearly overpowering the paper market. The tail is no longer wagging the dog is taking control. What happens over the next 7 days could permanently reshape how the price of silver is discovered globally. This is a pivotal moment, so pay close attention. Thanks for watching, and be sure to subscribe for more updates as the situation develops.